are two elements to our strategy. The first is to maintain steady production from our fields in China and New Zealand, and the second is to bring our potentially transformational project in PNG into commercialisation. As the first part of the strategy, we produce about 4,100 barrels of oil per day, and this is produced with a free cash flow break-even of about $33 per barrel, and with oil prices today at $62 a barrel, this leaves a margin of $30 per barrel available for debt reduction and other discretionary projects. The additional interest in Maari has increased our reserves by 43%, and along with that the borrowing base. It's increased our production by 1,400 barrels per day up to 5,500 barrels per day, and it has significantly increased our forecast net operating cash flow for financial year 2018 to somewhere between 70 and 75 million US dollars for that period. Payout of the acquisition will be in about 15 months, and when we reach that point, we will be able to accelerate our debt repayment. We're doing the acquisition at the right time in the cycle, with oil prices now starting to recover. The second element of the strategy is to advance the commercialisation of our large PNG resource position, which we've already identified in PNG, in a 1.5 million tonne per annum LNG scheme, which we call Western LNG. This will result in a transition of the company from an oil producer to a predominantly gas producer when the field comes on stream in the next decade. And we think this is the right strategy as gas begins to dominate energy consumption into the next decade in Asia. Our key focus is maintaining a strong cash flow into the next decade while we bring the PNG LNG project on. The increased Maari interest has helped us with that, and we believe with minimal capital expenditure, we'll be able to maintain net operating cash flow of about 60 to 70 million US dollars through 2022. We will also continue to reduce volatility in this cash flow with oil price hedging, which we've done successfully in the past, and by maintaining loss of production insurance over the producing assets. And this will serve our key objective in this area, which is to pay down the debt with this steady cash flow and to fund the PNG commercialisation. We've demonstrated a good trajectory in debt reduction, and today that stands at about, net debt stands at about 104 million US dollars. What all of this adds up to is financial certainty and stability as we advance with our PNG development activity. We think PNG is a very good jurisdiction to be in for petroleum investment. ExxonMobil has recently put PNG on the map with its very successful PNG LNG development, one of the most successful in the Asian region. In terms of our project, which we call Western LNG, a 1.5 million tonne per annum gas aggregation scheme, we have defined the resource. It's a large resource, 2 to 2.5 TCF of gas and 60 to 70 million barrels of condensate. We have significant interests in the 4 licenses that will comprise the aggregation, and we own an average 28% of the project. We've selected the development concept, and we're now in the pre-feed stage, which we expect to finish by the end of this year. The preliminary results of that are supporting the very strong economics that we had before we entered that phase. We will be overweight in PNG with our interest, and we will right-size it and that will generate some cash for us. And along with the $130 million milestone payment that's due to us, we've got a very good basis for the equity, the funding of our equity in the project. With the export of condensate and LNG will also be gas supply to the local market for power generation and other uses, and this will provide significant benefits to communities, landowners, the province and the state. That's an important element of the project for us. In terms of the markets, we are very close to the Indonesian archipelago where LNG consumption is growing rapidly, to the countries that surround the South China Sea, and also especially to China where LNG demand is growing dramatically in the next decade when we think our project will come on stream in about 2023. So we think we've got the right project and the macro conditions to make it succeed are right.